Welcome to the Tech Blog Writer Podcast, your guide to future tech trends and innovation in a language you understand. Now, over to your host, Neil Hughes.
Welcome back to another episode of the Tech Blog Writer Podcast. Now, as many of you know by now, and if you don't, you should, I love speaking with tech leaders and startups from all over the world. And I think I need to start thinking about getting a world map in my office here and put little pins and flags in the countries that we've shared stories from. Because just off the top of my head, I know we've had some amazing guests from China, Australia, Canada, France, Netherlands, Estonia, Denmark, Sweden, Russia, Ireland, and the list goes on. And I'm so proud of being able to share these stories from all over the world. Now today is no different, and I want to talk to a Belgian FinTech startup called Swanest, because they announced a really big partnership today. And Swanest also introduced a brand new online investment tool called Investment Assistant, based on algorithms that is designed to help private investors make better decisions when investing in stocks or mutual funds, etc. But the four founders started their tech startup journey in late 2014 with the initial goal to launch a robo-advisor in Europe. But I don't want to spoil the fun here, so buckle up and hold on tight so I can beam your ears all the way to Belgium so we can speak with Silvan Schumacher, CEO of Swanest. So a massive warm welcome to the show. Can you tell the listeners a little about who you are and what you do?
Well, thank you very much for having me in the show. And hello, everyone. My name is Silvan. I am one of the co-founders of Swanest. We are a financial technology startup based in Brussels, and we use algorithms to build a portfolio management tool for private stock market investors.
Now, the first time I heard about you guys was last year when you were described as a Belgian team of fintech entrepreneurs planning to launch a personalised robo-advice proposition. But can you bring the listeners up to speed on what you were trying to achieve then, and also why you were forced to take that step back and reevaluate?
Sure. In fact, we started already 3 years ago.
Wow.
It's been quite a while. As we didn't like how financial services were working, we thought of building our own, specifically in the investment space. We looked to the US and we discovered robo-advisors, as you mentioned before. These are applications that help people investing into diversified portfolios. They evaluate your risk level and then match it with a diversified portfolio. Wealthfront and Betterment are among the known brands in the States. We thought, excellent, that's a great business, that's good for investors, let's launch this in Europe. Well, it wasn't that easy after all. What became more and more evident to us is that the cost of acquiring a new user investing through your service, through your robo-advisor, are actually very high. Now, you may need to pay up to 500 euros to convince someone to invest through your service. And this person will then generate about 50 euros in revenues per year. And that messes up the economics of a robo-advisor, because a new customer will become profitable only after 10 years.
Wow, okay.
Now, that's pretty long time.
Yeah.
And now in our heads we thought, well, how can it be that we need to pay so much to make someone to use our service? Maybe a robo-advisor is not what people want. That was the trigger. And at that time, we were very lucky to join an accelerator program in Belgium called Nesta. And the program taught us lean startup philosophy. It was all about understanding your user, identifying their needs, their problems, and crafting a solution around that. And that's what we did. We went on a journey of customer understanding and product testing, which eventually brought us to where we are today.
So when you went on that journey of customer understanding and all that product testing that you went through there, what did you learn from that experience?
A lot. And it actually began quite in a funny way, at least retrospectively, let's say.
So you couldn't laugh about it at the time?
No, at that time it was actually pretty harsh. Let me tell you why. At the very beginning, we had this landing page and it stated, investing for everyone. Our coach challenged us on this. We obviously didn't seem to know our user. He asked us, all right, go outside and interview people on the street about their investments. Let's find out whether this is investing for everyone. So we went to the next shopping mall on the countryside of Belgium with the aim to talk to complete strangers about how they invest their money. It felt very uncomfortable, but it was a great exercise. When walking around this mall, we immediately could exclude the majority of people. They just didn't look like investors, they didn't look digital savvy, nor did they look as if they would put their money at risk with a young startup. So we at the end were more successful in business hotels. We moved from the mall to business hotels, and there we actually had found investors with whom we had good conversations. But we learned investing is not for everyone. But throughout this process, we also identified who our user is. We understood that there are actually people, they invest their money already, or they are interested in certain stocks or certain funds, certain investment products, or they want to learn more about it. And these are the people we are targeting now, not those that need a predefined model portfolio, but those that want to realize their very own investment strategies.
What I love about what you've done here is you've took away all these inputs and you've not been afraid to actually pivot. And then now you've come back and you've crafted this new product that's going to launch the portfolio management solution for financial publishers. But can you tell me more about this new product and also why you decided to join forces with the media industry too?
Sure. What it is, the portfolio management solution is a set of investment tools. They are still powered by algorithms, and they are here for private investors, helping them to build, optimize, analyze investment portfolios. And as mentioned before, the portfolios can consist of any stock, exchange-traded fund, or mutual fund, which are fully independent. So it's an independent tool, independent portfolio management tool for private investors. Now, business media can integrate these tools on their websites. With business media, I mean the Financial Times of our world. There are these news websites. Often they have market data sections. Sometimes they even offer already some portfolio tracking tools. But they need more. What proves to be in our advantage is that all these news websites are forced to innovate. Business media see free content to decrease their subscription income. There is Facebook and Google taking them away a big bite of their advertising income. And younger generations don't consume news on their platforms anymore anyhow. So business media need to innovate. And what they understood is that in this process, it is most important to focus on the needs of an audience. And that's exactly where we became good at. Business media cater to private investors, and these investors need great tools. So that's how we can help them. And on the other side, business media do understand marketing very well, and they also have a very wide reach, which benefits us. We can bring our tools very easily to a wide public. And this is how we can help each other.
Now, I also know quite a few people at the moment educating themselves, and especially when they're investing in the volatile market of cryptocurrencies. I mean, are you noticing a significant rise in do-it-yourself investing? And also, how can Swanest help the self-directed investor?
Personally, I indeed realize a rise of do-it-yourself investors, but that's more a subjective perception within my little environment.
Yeah.
The interesting fact, though, is that all these young people that don't start investing into the stock market, their first choice now are cryptocurrencies.
Yeah.
And that I haven't seen before. And that's not something bad, at least as someone doesn't put all his entire saving in such risky assets. People will experience firsthand what it means to invest, and they will get a taste of a bumpy ride, especially when one or the other bubble burst. Now, with Swanest, we want to help investors to learn and understand investing so they can take informed decisions. And our approach to this is rather simple. We basically look at the questions investors face and then build tools that can answer them in a easy but still intelligent way. For instance, or when you start off investing, you ask yourself, what are good investment products? You will ask yourself, what is a portfolio? How do I build a portfolio? How much risk am I taking? How should I allocate these assets? And how should I manage these assets? And we focus on these questions and then help people to solve them. The great thing I need to add with Swanest is that it's all in a simulation mode, meaning that people can use the tools, they can play around with it, and this way they can start learning and understanding without burning their hands in the real market.
Now, we did mention the volatile world of cryptos there, which to many is an incredibly risky investment. So, and you did mention that you do help people with risk at Swanest. So, for anyone listening today, how can Swanest help define the risk tolerance of anyone that's listening?
Risk management is actually the very core of our new solution. For any stock, ETF, mutual fund, either for single products or in combination, we can help identifying the risk. Therefore, we developed the risk score. This is a number between 1 and 100 and helps understanding how much risk you are about to face. So 1 very low risk and 100 very high risk. The number is great because of multiple parts. Usually, when investing, people would describe risk as the volatility of an asset, hence how much a product goes up and down. That's what we usually perceive as risk. And this is a very important indicator, but it's by far not the only one that you should consider, and neither does the risk score. The risk score goes beyond. For instance, what are the biggest losses in the past that the asset has faced? How much time took it to recover? How does a asset interact with other assets? The correlation. How diversified is a product per se, or how liquid is an investment? And we take all that data and break it down into one single number, the risk score. But then we do not stop there. To make this risk more tangible, the algorithm also computes how much you might lose in the upcoming month versus what you might gain in the long run. Very easy, yet quite clever. And we even compute scenarios. Therefore, we use mathematical models, compute 20,000 possible outcomes, and this way we can help you to understand what would you face in a good scenario, but what would you face in a bad case. And one more thing, once we identified risk and once we helped you to understand this risk, we even help you to manage this risk. With a couple of clicks, Swanest will change the allocations in your portfolio, or even suggest you to include or exclude products in order to manage the risk, to adapt it to the level you want.
So do you think we can predict the financial markets all using algorithms? And how accurate do you think they are at the moment? Assumingly they're just going to get better and better, aren't they?
Yeah, but I don't think anyone or anything can accurately predict the market at the moment. Yeah. Neither can an algorithm. If it could do it accurately, then I would be already lying on a private island because it would just have made money for myself and that's it. So yeah, I don't think so. But what algorithms can do very well is crunching a lot of data and applying financial theories. So they can help us to form better expectations that then hopefully lead to better decisions. These computations, I must say, work especially good for risk. It's easier to quantify. It's easier also to optimize things or to conduct simulations. But what is very tricky is to predict future returns. We can approximate, but it's tricky. Also, we should not forget that the stock market is a zero-sum game. Besides the overall market growth, if someone wins, someone needs to lose. Meaning that there won't be ever an algorithm creating magically money for everyone. That will never exist.
Now, it's also increasingly being said that data is the new oil, and others will say that Bitcoin is the new gold. And it's easy to see why with the rise of AI and machine learning. I mean, do you see this too? And knowing how important AI is now, how can listeners think about investing in AI?
Yeah, we fully agree. Data is the oil of the future. If you want to build artificial intelligence, which is clearly the future of where we are heading to, you need data. Yeah. No data, no AI. What will be important is to have unique data, something that is not available in the internet, can it be easily gathered. It must be unique data that your service generates, for instance. And I don't see the algorithmic side of a big problem. We already see more and more general purpose algorithms popping up that you can license or buy in the future. Sometimes there are even open source projects, but the unique data around something or someone will give you an edge in the future. Now, there are possibilities to invest in artificial intelligence. There are exchange-traded funds that combine the entire sector of companies that make advancements in artificial intelligence. You can invest in those. The same is for mutual funds. There are mutual funds that invest into these sectors. or you invest directly into certain companies that make advancements in artificial intelligence like Google, Facebook, or Tesla.
Now, already we're thinking about looking forward to the next year, 2018. So I'm going to ask you to look into your crystal ball and look into the future. I mean, what's your grand vision for Swanest?
Yeah, so the grand vision will not stop at 2018. Will continue, and it's exactly about what we discussed before. We believe that the future is about intelligences. So we will not see a master intelligence anytime soon. Something knowing everything is still far away. But we will see intelligences that master a certain topic better than everyone else. And Swanest will build the leading intelligence for someone's private investments.
So for anyone listening that wants to find out more about your big launch and also what you do over there at Swanest, or just have a few questions for yourself or a member of your team, can you point them in the directions of your website and any contact details for your team?
Sure. Our website is swanest.com, and the new business solution for financial publishers that we launch will be accessible via business.swanest.com. And everyone that has a questions is invited to send us a message to hello@swanest.com.
Fantastic. Well, a huge thank you for coming on the show today. We often hear about startup journeys and that roller coaster ride of tremendous highs and tremendous lows, but we don't hear enough about startups that actually take a step back and actually pivot and take a different direction as and when needed. I think that is the key to success in the startup world. So a big thank you for coming on and actually sharing that story with us today.
Thank you very much. It's been a great pleasure.
Silvan and his team have been approached by several banks, asset managers and brokers for partnership. However, their mission has always been to empower investors and remain independent in that guidance that they provide. And they also believe that quality publishers share the same values. Now, Swanest is a financial technology startup that develops intelligent investment tools that help investors to build, analyse and manage their portfolios, but in a simple way. And I applaud them for using technology for the greater good, but for also keeping things simple. And I'm a big fan of what they do and generally grateful that they came on and shared their story today, because anybody on their own tech startup journey, I'm sure they're going to learn a lot from today's episode. But back to you. Yes, you half listening there, sat on the train or in your car, browsing your favourite website, Christmas shopping on Amazon or on Reddit forums. But it's time for you to pay attention now and say hello to your friendly host, or send him your thoughts and questions so he doesn't feel like he's going completely mad sat in a room recording these podcasts every day. So keep those emails coming to me personally, which are to techblogwriter@outlook.com, or equally send me a tweet to @NeilC.Hughes. Now, I don't know if you've been able to tell this week, but my voice has been going a little bit mid-interview, which is why I've been holding a few of them back, because it take a little bit longer to edit when I keep having to clear my throat. Hopefully it's not man flu, and hopefully it's not man flu, and we'll carry on recording podcasts to the end. So hopefully I'll see you back here tomorrow. So a big thank you for listening, and until next time, don't be a stranger.
Thanks for listening to the Tech Blog Writer Podcast. Until next time, remember, technology is best when it brings people together.